Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Chelsea Oliver. Welcome to today's morning call. We have mostly red arrows around the world today as technical damage keeps adding up and risk continues to come down. The Hang Seng is closed today, but the
The Nikkei
I'm
been closed.
getting confused with the Nikkei and the Hang Seng. The Nikkei has been closed and the Hang Seng is off about 0.7%. Europe still feeling under pressure as well, with the DAX losing its 200-day. Seems like we have pretty similar headwinds overseas as we did yesterday.
Almost a little bit even stronger. For the past week or two, we've been watching some of these faulty signals and technical damage add up. So it's been giving us some clues to, bring risk down over here also. And like Chelsea said, the DAX is now below the 200-day. So that's never a healthy sign. We like to be out of things when they break the 8 and the 21-day, but then if something gets below the 200-day, it's showing, some bigger damage. If you look here at the EWG, which we've been, discussing for quite some time now, here's really, the rally off the lows, and here is when it finally got above the 200-day, which sometimes is healthy. Okay, at this point, it's right below it. My rule is, sometimes it's a trap, sometimes it's not. It's got to stay below it for a few sessions to show, real weakness to then break down. So if this is going to be another true sell signal, it's going to have to stay below this, just say like 26.14 for a few sessions. Then if it were to break this trend off the lows, you'll even see stronger headwinds out of Europe. And as far as the Hang Seng, if you take a look here, you'll see that it never even got to the 200-day, and it's already breaking below the ascending channel here. So we are seeing headwinds versus tailwinds out of the overseas markets, and you have to notice that because we do trade a global tape.
S&P futures are down 12 to 14 handles, giving some downside follow-through to recent weakness. How can you seem excited about this setup?
Well, the markets go both ways, and sometimes when you're in a momentum bullish tape, like when we're above the 8 and 21-day, I try and be long multiple positions. So I usually, I'm hoping for up opens. When we're in a technically faulty tape or below those 8 and 21-day moving averages, I tend to have risk down. So, I come in pretty much flat equities today. So if you're flat today or short, you're happy. That means you've been reading the tape. If you're short, you have a head start on the day. You'll probably be covering. What I would do is if I was short, I would cover half now and then see, if I need to cover the other half. And if you come in flat and you sold higher, that means you get to test levels lower. So what are those lower levels? Let's take a quick look at the SPX. We've talked about, the trend since this double bottom low. Here is your double bottom low. Here's your, first move, and then your second move. Your response, your short covering, and then here's when the trend started. This is when we went back above the 8 and 21-day, and we've been above it basically since last week. Last Thursday, we lost this upper area. We broke the ascending channel, and that's what this is, an ascending channel. That means something changed. And then on Monday, we came back up. I know it was tricky the way it happened. It retested, and then basically it was a bit of a trap. And now for today, we'll see what happens. We'll see, can the market stay below 2052? Right now, I think we're around 247. So it might come up and retest it. If it can't reclaim it, chances are, we're going to be seeing a move to at least this 2037 or maybe even this 200-day right here. I was hoping that we would see a quick move here because the oscillator right now went out of minus 37, so it's probably minus 50. So when you have an oscillator minus 50, chances are, unless you came in short, you probably shouldn't press the open, and you might even get some kind of tactical move, to buy if you sold here or if you sold here. Now you have the luxury of testing lower, but we'll see, what happens in the first 30 minutes or so.
The tech sector that has led us lower continues to show weakness. What's the next point of reference for the Qs here?
So thank goodness for the tech sector because it gave us clues to get out of Dodge and other areas. Because anytime technology is weak, traders notice. Healthy markets are usually led to the upside by technology, not to the downside. So if you look here at the Qs, you will see, the Qs lost the 8 and 21-day well before any other sector. This broke 109.80 right here, then went sideways and continued lower. So now we'll see what happens, with this point of reference. The point of reference on the Qs is 104.88. We'll see whether or not this holds. Actually, it's probably opening below it, whether it gets reclaimed. And if it doesn't, your next point of reference doesn't come into effect until about 103.31. So if we were to see 103.31 fast, that's probably a spot where, guys that sold here or sold on this Thursday, red dog reversal outside day, have the luxury of testing to figure out if it is a dip to buy or not.
Most sectors are below the 8 and 21-day moving average. How do you technically look at small caps and bios?
Well, the bios were weaker, almost a week ago, and the small caps just played downside catch-up yesterday. But if you use those 8-day and 21-day moving averages, you're not caught in it. If you look at the bios, you'll see that the IBBs basically broke this ascending channel right around here and lost the 8-day north of 280. So if you got out of it here, look, it was above the 8-day pretty much for the whole time from 262 all the way up to almost 289. That's, I don't know, what is that, 27 points? So if this was your out, boom. And then you had confirmation below the 21-day. Now it's opening below here. So at this point, the bios are just a trade. And the next time, potentially it's a decent long setup is if it tests this 257.50-ish. Or, maybe it goes green today and reclaims the low here of 264.64. So I'll be looking at the bios to see if they get a downside extension, maybe I'll buy in the hole, or if it tries to reclaim this, maybe it goes green and gives you a small tactical cash flow. But either way, this trend off the lows broke up here. That's when you make your maneuver. And finally, the Russell, which has been acting well, got you out of it yesterday also. Why did it get you out of it? Because first of all, this spot broke here, and if you didn't use that as a breaking point, boom, it lost a 21-day. That's your out. 8 days, the first little shot across the bow, the 21 days next, and if you sold here or sold here, you will have the luxury of testing and perhaps buying here. If you got short here, you'll make a lot of money into this spot. So this is this is yesterday's low. If you want to write it down, that's to see if we reclaim it, 110.93, and here's the 50-day, which is a spot that correlates to some pretty big support from April-ish. So that will be the next spot that I would be looking at for some kind of technical, tactical, cute little bounce.
Most stocks in high beta tech are all broken. Scott, do you think that you'll look at Amazon and Facebook again to see if there will be a red to green cash flow trade?
Yes, and we were talking about what is a red to green trade. It's really when you open down and start weak and you get stronger. And the strongest names are the ones you look at. Yesterday, they both did not go green. I actually was in Facebook yesterday and didn't really give you a way out of it. Amazon also, was down 11 and then was down 5 and then closed down 11. So we'll see what happens today. They're both down this morning. You look here at Amazon, still well above this earnings gap. So it still shows momentum. It would have been better to hold this little pivot, but I think it's below it now. So we'll see what happens today. You have two levels of support for Amazon. One is right here at 662. Maybe it holds it and tries to go green and continues to build a level above the gap. So that could be something to think about today. But if it happens to come back to this 654-ish and doesn't, trades into the gap and you're long it, I would use that as your stop. Same thing for Facebook. Facebook is actually, kind of been a little choppier than Amazon, but it's still above, the prior highs and above the earnings gap. So we'll see, if that can continue. Yesterday's low is 1702. If it gets below that and stays below that, I'd be a little careful. I wouldn't be long. And if it reclaims that, maybe it's something to look at today. It's down like 60, 70 cents. I'll look to it to see if I see some kind of divergence. And if I see a divergence, maybe you could buy it red to go green for a trade if you don't own it. Because these two stocks are considered best in breed for now, but if the market continues to show technical damage, it's going to be hard for them to hold up by themselves. And then your true stop should be 115.84.
What about the more broken names? Is there anything to do with Google, Microsoft, or Netflix?
The other day they gave you a small little bounce, but that's all it is. These bounces have been sold. Google has some news of some kind of autonomous car, so maybe, Google is worth a look if the market wants to, start negative and gain a little bit of strength. But this stock is very broken. Look at the size of the hole. We talked about the hole, and here it is. And then from this, you had your downside selling when it broke the post-earnings low, and now it's struggling to hold the 200-day. So if you If you want to try and be long, maybe be long versus 703, 703-ish. If you think that this bigger channel is going to hold, which I kind of think it will, but you got to be careful just in case. Here is the lower end of this channel, so I would think that maybe there is some interest down here. But again, look at the size of this hole in the chart, and it's starting to show some momentum weakness. Microsoft gave a quick little trade the other day, but quickly got rejected by the 200-day, and the longer this thing stays below the 200-day, I'd take care. Here is your basic recent pivot, so see if it holds this 49.35. If not, and you're still in it, I would get out of the way. And the last one is Netflix. Netflix gave a small bounce too on Monday, but didn't really see much. It gave you, at least if you were long it a way out yesterday. I guess this is one support level here to see if it holds this 90, and then you have the lower pivot. And I don't know if it wants to try and be a little bit better, but it's still in the penalty box. Maybe it continues to go sideways and it breaks above this for another trade to retrace higher. But at this point, be very careful. A day like this or a day like this, since being broken, has been negated pretty quick.
Apple had a small bounce after Tim Cook's segment on Mad Money. Scott, I know you sold into it. What are your thoughts now?
Yeah, yesterday it was a good trade. I came in long thinking, I'm going to game his segment, and you figured, Jim would throw some lobs, and he did. And to me though, it's still kind of broken and has a lot to prove. Also, I got to thank Jim. Jim, said something about their patent infringement in China, how they lost a case, et cetera, et cetera. So I just didn't take it home. I just took one day. And usually with one day, you look for 2 or 3, but this name has been, that's been far and few between. So anyway, if you look at the chart here, you'll see, you have very big support here going sideways. Okay, this is your 92, 92.50. Yesterday was a decent trade when it took out this 2-day pivot, and now it's down 50 cents or so. We'll see if the buyback is strong enough to hold it. I would say if you're still in it from yesterday, use this. I would use 93.68-ish as your stop. I wouldn't give it all the way down to the lows because you're giving everything back. But if it could hold this and go sideways, maybe it develops a little pivot for a bit more upside if the buyback is strong enough. Plus you have ex-dividend on, I think, May 5th, so there's one more day that people could buy for the dividend. But overall, macro-wise, starting to hear a lot of debate about Apple. You could hear it being spoken about everywhere on TV. Everyone's got an opinion. For me, I'm going to let the stock speak for itself. And here you had this downtrend that it never broke above. Here it lost a 200-day. Here you have a huge hole. If it doesn't get in this hole soon and rectify it, it's a lot of weakness. And then here is your huge support going sideways. So this could be a huge head and shoulders top pattern with the left shoulder, the head, the right shoulder. And if it were to break this 92, 92 and a half, it's going to pressure technology even more, and could see the mid-80s in a New York minute, or maybe 5 minutes.
Maybe. Tesla is out after the close today. What are some levels to watch there?
At least Tesla kind of broke down prior to earnings, so it's not priced for perfection. At this point, I don't see anything so compelling, though, to take it into the report. So I'm just going to avoid and see what happens, thereafter. I think that their earnings this quarter is not going to be great, but the reservations for the car, the lower priced electric car are probably off the chart. So it depends which one they emphasize on. You look here at the chart, still overall in a macro sense, the chart looks much better than others out there. You have defined resistance all the way up here. Basically, here is your V bottom, and it's still in the top third quadrant. It just, if you look at it on a shorter term basis, it broke this inside wedge, which we trade from day to day, to the downside. So if you made some money short, congratulations. I haven't really traded it in multiple days. This was your inside wedge that broke to the downside, and now it's coming into some bigger support. So here, after the numbers, the 200-day is pretty important. It's 223, and then your momentum resistance really comes closer to 557. So if you trade it after hours, some support, resistance, but remember, the 200 days all the way up here, it was all the way down there in February. So take a little care. Just don't jump into it, and I would say maybe even trade it tomorrow. Might be a better trade versus an after hours tonight.
Metals are on their third down day, and I know you made a sell suggestion on Monday. Would you be looking to buy back the GLD? And for those short the miners, would you suggest that they cover?
Well, this is like the third down day since that. On Monday, I sold my GLD from 120 to 124. I figured $4 is good. And then I also, created a call spread. I was long the GLDs when it was like 119, bought the 120, so at 124, I'm like, you know what? I'll sell the 124s for 2 and change. So now, if you look at the chart, it's kind of interesting because you did just get a pullback, and it's playing catch up to the 8-day. So this is a spot around 121.35. So it looks like it's going to fill this gap pre-market. So I would say somewhere closer to 121.50. Maybe I'll look to buy back the GLDs, or maybe even buy back the 124s I sold, hopefully for peanuts, and then keep my 120s, and we'll see what happens next. But overall, from here to here was a good sale, right? Because that's my day count. And look how far extended it was from the 8-day. And if you happen to have shorted the minors when I said to do it in my note, and you're still short, congratulations. Look how extended this move was into here versus the 8-day. And now it's pulling right back into it. So sometimes it wants to play around with it. So, into this down move this morning, I would cover it if you're short. And if you're looking to be long it, because you have been doing really well long this, just be careful of how far it came. And I would say wait for a move a little bit closer to 123.80-ish. And some guys are talking about NUGT where they're still shorted and they're covering, and they're looking to be a buyer of this somewhere in between the 8 and the 21-day, closer to this 92-ish. So look at that, boom. I was shorted in here, and this could have been a really monster 25-point trade. But anyway, if you are shorted, congratulations, you stayed the course. And if you're looking to buy it back or just get long it because you sold the strength, this zone seems pretty strong between 90 and 94 even.
Do you have any more closing thoughts as the market today seems a bit oversold but has gone from bent to more broken?
Yes, we were talking about it bending when it was breaking the 821 day, and now I feel like momentum-wise it's pretty broken. But whenever you get an oscillator at almost minus 40 and then you're down 12 to 13 handles, it makes it a very tough short, because that means the oscillator is probably north of minus 50, but doesn't mean you have to bounce yet, but you could look at spots for it. So what I'll do is let's look at the spiders, which we haven't gone over, to see where potentially we could see some type of bounce. This is when you could have sold that upper ascending channel break. Here is the 2 pivots that tried to hold and were below, and this is your 50-day. So the 50-day at 203.76 would be awesome to see that. I feel like if you start buying a little bit too early, you might get stopped out. But if it were to see this morning or at some point, I would say you could test that, and within this zone, maybe we get some kind of tactical bounce. The worst thing would be is if it opens at 204.90 and then just rallies right up because it feels like it's in no man's land. If that happens, then if it reclaims 205.03, buy it there, put a stop at the the low of the first 15-30 minutes, and then see if it turns into another day like this. But overall, if you sold strength and you got sold more strength, you could buy weakness, and that's what we're seeing this morning is some weakness.
Great. Thank you, Scott.
You're welcome.
Have a great day, everyone.